Hey everyone, welcome to Flywheelpod, your number one source for everything Frax, DeFi, and everything in between. If you want to know what's going on in the world on chain, you've come to the right place. This is DeFi Dave, here with capital K, and we're here to help you harness the power of the flywheel. And this time around, we were with a Flywheel OG, a Fraximalist from the beginning, someone who has covered Frax from the early days and now is working on something special himself, the Justin Bram. This was a really special episode, I think, because we went in deep on so many topics, whether we were talking about the VE system in general, its merits, its kind of like, what else, critiques of it as well. We went deep into Astaria, his new project. We went deep into a bunch of different things, which I think our OG listeners will enjoy. So, Kiet, what are your initial thoughts on this one?
Dude, I mean, Justin is my boy. I met Justin way back in 2019, and he was just a general good dude. And we found ourselves kind of like both in the crypto space, just kind of crushing it. And I'm so happy to have him on. He is a genuine guy, and not only that, he's so humble. Like
Yeah,
he is a bona fide builder, and he just kind of just shrugs it off. So I'm very happy to have him on. Like my favorite pods are when we have builders on and we just talk to them about their product and their project and their
yeah.
perspective in the DeFi world or in
And
crypto in general.
yeah, and Justin has been on a journey. I remember first meeting him in 2021 when he was first coming out with the Frax videos and him working at Brink, which was obviously a very similar product to
Mhm.
Gelato, which I was at the time. And
Right.
so, we knew of each other there. And then just like seeing his journey onto Ondo and then, now to the CEO of Astaria, like definitely inspiring, definitely well earned by Justin. And I'm, talking, we went deep into Astaria and he really explained well how it worked and made it how it's different and unique compared to other NFT lending protocols. And really, like the opportunity there, I think is massive, especially like if they can pull it off right.
Yeah, look, it's super innovative. I love that they're experimenting and we need more of this, right? This is, bear market is to build things and you love to see it. You love to see it.
You love you love to see it, and then if you love what you're seeing, don't forget to like, comment, subscribe, hit that bell button on YouTube. Keep up with us on Twitter at Flywheelpod. Join our Telegram at Flywheelpod. You can follow me on Twitter at DeFi Dave 22.
You can follow me at 0xcapital_K.
And let's get the flywheel spinning. Do you hold ETH but don't know what to do with it? Want to earn those juicy liquid staking derivative yields but don't know where to start? Well, FrxETH is there for you. FrxETH is Frax's native LSD solution, allowing you to earn boosted yields in multiple ways on your ETH. If you want to get started, go to app.frax.finance and turn your ETH into FrxETH today. This week we have on an OG Fraximalist. He's been with it since the beginning. His videos back in 2021 first brought a lot of attention to Frax and DeFi during that cycle as a whole. Now he is the CEO of Astaria. We have the Justin Bram on. Justin, how you doing today?
I'm doing great. Thank you so much for having me, Dave. It's good to talk to you guys. For some context, Dave and I have bumped into each other at various different crypto events, and Capital K, who I know as Kiet, we went to business school together. We actually just had lunch on Monday, so we're good friends. We hang out a lot in LA here, so it's great to come full circle and be on the podcast with you guys.
Yeah, and honestly, it's an honor to have you on because in a way, you predated our show in terms of like covering Frax on a deeper level and helping people understand what Frax is. Because as you know, it's not easy at the beginning. It's a lot to delve into, and honestly, it's gotten a lot more complex from there. But I want to like bring it back to the beginning, like back when you first started creating YouTube videos. Like Frax was your first one, so like, what made Frax like your primary center of attention for videos?
Yeah, it's a good question. So before I discovered Frax, so I think Frax came out in November, December 2019. I found Frax in January of
Yeah,
2020.
yeah, it was
Um,
December 2020, so it's probably 2021.
Gotcha. Okay, yeah, you're
Yeah,
right. And so right before that, there were all these like Ponzi stable coins that were so fun. And at the time, I was new, so I didn't know they were all like sort of scams or pump and dumps. But I was just having a great time. Like if you guys remember Based and like Basis Cash and all of these crazy little projects, they were a great time. They were fun. Looking back, it was just playing at the casino. But
Just market
I learned,
buy. Just market buy.
yeah, yeah. But I, learned a ton. And when I discovered Frax after that, it sort of made sense to me as a much more sustainable model than this like fully algorithmic coin that, in my view, wouldn't work. And so I was like, looking at what to do on chain and, figuring out where to farm, et cetera. And I just built myself, my own spreadsheet. I was like looking at the Frax ETH pool, which is a stablecoin ETH pool, and locking that for, I think at the time, 3 or 4 years, and then like estimating my returns. And I sort of modeled out what the returns looked like. And I also knew my downside was sort of capped because like the Frax stablecoin at the time was, I think, 90 to 95% backed. It's probably like 90% backed now. So I was thinking, well, the worst case is I get a 10% haircut here, but it's earning at the time, I think, a 300% APR for being locked. So I might as well do this. It worked out really well. And I was pretty like confident and proud of the spreadsheet I'd built to sort of like model this out. So I was just figured, well, I was a film major in undergrad. Before I got into business and crypto and more of that, I always like had a passion for creating content. So just decided to make a video, and the Frax community has always been a welcoming community. I was pretty active in the Telegram, so when I shared the video, Sam was very supportive of it, and the community as a whole was too. So it sort of catalyzed my YouTube channel, which I'm very grateful for.
Yeah, I remember like at the beginning, it definitely caused a bit of excitement because like I said, I think you were like the first one to like really shine a light on Frax more than anyone. And I feel like in a way, like we grew together, like Frax grew as your channel grew, and then your videos started getting like tens of thousands of views. But definitely like not only were you active in the Telegram community, but you're also active in governance forums as well. Like you weren't just around like covering videos. Like, no, you're like an active member of the community. So what was your experience like, being in the Frax community and, talking to people day in and day out?
It was great. I think a lot of that comes from Sam. I mean, I would consider Sam to be a friend now. I've met him a couple times here in LA. I mean, you guys know him pretty well. He's just, in real life, just a good person, a nice person. I think that translates pretty well to the community. I think it's, pretty top down. So yeah, working with the community has been great. They've been very receptive of governance proposals. I think I've done a few, partnered with some other folks to do a few as well. And I think it's different from what I've seen in other governance forums. Like, I don't want to pick on any one project, but like if you look at the Sushi Swap community, like if you go there to propose something, their first reaction is to sort of attack you. And I think with Frax, I like really respect that. Like, we might disagree on the idea, but like we're all reaching for the same goal. We all want to make the project a better project. So like, let's figure out if there's anything here, if we can improve upon it, as opposed to just sort of like attacking someone for proposing something.
Yeah. And I want to get to, what it was like covering DeFi during that 2021 cycle, because it was not, that was the cycle. That was like the bull, everything was exciting, all these different experiments, whether they, good or bad, they were happening. So what was it like covering DeFi and especially stablecoins at that time? Because you had Luna, you had Mim, you had Faye, you had like everybody like had their moment being the quote unquote main character, like being like, the center of attention. So what was it like covering DeFi during that time, especially stablecoins?
It was a lot of fun. I think I suffered a lot from, if you guys know the IQ meme of like, you have the left band, which is like 50 IQ, and they just ape into things. And you have the middle band that like tries to think through everything, but is never like one step ahead of where the action is. And then you have the far right side where they're like a step ahead of the action. And I've always found myself in the middle. So, yeah, I was never too successful doing like the L1 trade or like getting into Luna, timing anything perfectly like that. I've never been much of a trader. I just, farmed pretty conservatively in like smart spots, mainly Frax, and then a lot of ETH holdings. So it was a lot of fun though. I think it allowed me to grow the YouTube channel pretty quickly. There was just so much mind share. People were trying to figure out what yield farming was, what DeFi was. And I think to this day, there's still like very few content creators that are like refusing to cover anything that's like a pump and dump or scammy, and that are actually covering what's innovative. which is what I focused on. So I only wanted to cover a project if I thought it brought some innovation. If it was just like a farm for the sake of a farm, it really didn't interest me, and I never ended up covering it. And I think there's still only a few people that are doing that to this day. So I think there's definitely like room for more folks that if you're watching this and want to create content that's helpful to folks, you definitely can.
Yeah, no, I couldn't agree with that more. I feel like we're in a sense, we're in a content desert because a lot of people want to cover like, oh, like invest in this, make money, this and that. But like, if you are really covering the innovation that's going on, especially at the DeFi application level, and you're like one of the pioneers in doing that. And so going back to the cycle, like what other, other than Frax, like what other projects were you excited about during that time? What other projects did you think were novel?
Yeah, it's a good question. It's funny because, if you zoom out and where we're at today, there's only like really like a handful of projects that have sort of any relevancy and or bring any innovation to the table. But at the time I was fascinated with everything. I was very fascinated with how Curve worked. I thought, it was a unique experiment and a new model for tokens. I think stablecoins were really the great narrative of the last cycle. To your point, I did a lot of work with Faye. I did a lot of work with Frax. Everyone's familiar with UST. Everyone's familiar with the drama around DAI, and everyone's familiar with the success of USDC and sort of the hesitancy around USDT. And so I think stablecoins of the last cycle were like one of the biggest, if not probably the biggest narrative that everyone was focused on. So there was, I did a lot of stuff around there. Also very fascinated with.
Go
I was
ahead.
going to say also very fascinated with market makers and exchanges, and frankly like very impressed. Like looking back at it, Uniswap V3 was such an important innovation. It's so impressive. So
Yeah, I couldn't agree more. I'm a big Uni V3 fan and everything they built there. Do you have any reflections on last cycle? Like anything you learned after the hype was said and done? Like, what are your most important takeaways?
yeah, it's interesting. I think a few things. Like one is that looking back on it, projects would launch and we would sort of our default belief was that they would sort of last forever and they would go on. And then like if you look at the last 6 months to a year, it's been like everyone that didn't have true product market fit, and when I say that I mean like they're not paying for users with a farm, has slowly been shutting down. And like back then we sort of just took for granted like, oh, this project is going to be around for years and years, it's going to capture mindshare, when in truth things like fade out pretty quickly. And I think the other big takeaway is that the incentives just are not sustainable. Like if you're paying someone for product market fit, if you're paying someone to use your product in whatever way you're doing it, whether it's with incentives, a farm, etc., in my opinion, you're just sort of like hiding the fact that you don't have product market fit and pushing that problem off.
So what would you
Yeah.
do differently next cycle, Justin, seeing this, having learned this?
Would you
Well,
continue
a
being
lot
a
of it,
humble farmer?
I don't really do much farming anymore. The only thing I hold is Coinbase staked Ether. When I bought it, it was trading at a pretty big discount, and so I was just trying to stack ETH. And I think Coinbase is trustworthy enough for me personally. But Kiet to answer, or capital K, I'm not sure how you'd prefer me
It
to
doesn't matter.
refer to you, but
Kit, because it's more endearing to hear you say my name.
I just call
well,
him Kit, to
Kiet,
be honest.
cool.
Yeah.
I think the big thing is everyone launched a token over the last 2 years. Like if you had a project, it just was natural that you had a token. And like we can talk about what we're building in Astaria later, but we're not building a project to create a token. Like we only want to have a token if it makes sense to have one, if there's like actually a real purpose there. We've seen like governance debatable if it's a true use case that sort of got memed into existence. But I think how you go about thinking about your token, and even if you have a token, you don't need a token for the first few years of launch, right? You can launch something, and if you don't have adoption, if you don't have users, well, then you might not be building the right thing. You don't have to jump to a token. You can keep iterating and iterating. Once you launch that token, you're sort of trapped into something, or at least you have sort of a moral obligation to the people that hold that token to sort of perform for them or add value to them.
Mm-hmm.
Got it. And the current meta right now, as I scroll through my timeline, is always about guide to XYZ airdrop, ABC airdrop on Arbitrum. Like
Make it
literally, like,
stop. Make
dude,
it
make it
stop.
stop, right? I feel like these airdrop guys are so clickbaity, and it's my timeline is starting to feel like how on YouTube the thumbnails when you see like the guy's mouth is like and like, 18,000%
Yeah.
APR. Like, I'm starting to feel that way again. And do you think that the retail has learned their lesson of like chasing these unsustainable yields, or when do you think this sophistication that you have is going to dawn on people?
Well, I think it already has. I don't know of any projects that are like thriving with just sort of like a farm as a service where all they have is a farm. I mean, every token across the board that's not really BTC and ETH has been punished for it and hit hard. And I think things have come back to reality a good bit. Um, I will say though, like in December of 2021, so just about a year ago, I put out a video of what I was expecting for 2022. And I did say I thought I got some things wrong and some things right, but I did say I think the like 2021 was the year of the airdrop. I mean, I like for me, you can have like life-changing results from airdrops. Like with Ribbon, I put one ETH in the platform and I think you got a $40,000 worth airdrop that of course I immediately swapped right to USDC or ETH after. But yeah, I mean the airdrop I don't think makes sense as a mechanic to bootstrap communities anymore, right? Like the rational play when you get an airdrop is to sell it, frankly. Like we very often see tokens outperform ETH or dollars. I mean, especially not ETH. Um, and so I don't think it's a great way to bootstrap a community. I mean, you're just sort of getting some sell pressure. The people that got the airdrop are unhappy that they didn't get enough, and the people that didn't get it are unhappy that you didn't give it to them. So you sort of can't please anybody with it. Like, I got the Ribbon airdrop. I did nothing to, quote unquote, deserve that, but I was still like a little bit upset I didn't get more, which is sort of a flaw in me, but it's also just goes to show you like the human nature aspect of it that I don't know if it'll be a great bootstrapping mechanic for communities in the future.
Yeah, I think with Uniswap, when they did their airdrop, since they were the first one, everybody was so happy. They were like, it was like Christmas. It's like, you got it. You got
Yeah.
your Uni Stimmy. You got your Uni Stimmy. It was great. It was good vibes all around. It was like, 2020. It was still like DeFi summerish. And, it was, they were still like, because if you used Uniswap at that point, you were like, I guess you can say now like a DeFi OG. Like I even have a friend that isn't even DeFi native, and he like ended up like doing like a little bit of farming and like trading on Uniswap, and he got the airdrop, and he was like, "Wait, what just happened?" Like there was a certain magic back
Yeah.
then, but now
Yeah.
like that meta has been played out. That incentive has been played out, and then like by the time you see like threaders writing for engagement to get like, "Hey, like this is the next airdrop," like it's over. It's over.
Yeah.
See,
Did you
like,
guys
dude, I,
see
I don't think so. So sorry, as before we move on, I just wanted to bring this up because, like, when I talk to folks who are uber retail-y, like this concept of an airdrop and receiving this and tokenomics design, like I was just trolling, but I went into this a tokenomic workshop, and they were talking about dual token designs and how you have one token as your governance token, and then you have another token as like a utility token, and it's you need to manage the velocity of your token because when it's not ideal for when people want to swap out your token for a stable coin. And I'm like, this is a workshop and there's like 30 people in this workshop listening to this stuff. And I'm just like, oh my God, like this is still being spewed as like the latest and greatest. And this is like a boot camp pseudo type for other startups like that are non-crypto obviously. So in my mind, like I don't think so. I think we're gonna have another crop of this airdropping
Yeah,
unsustainable yield, and just
it's just
there's
gonna
gonna
come
be
in a
a
different.
bigger one.
No,
Yeah.
I agree. It's going to come in a different form under a different name. I mean, ICOs became yield farming and NFTs, and it's going to
Right.
come some other way the next cycle. I don't know what it's going to look like. I have a theory it might look like initial social offerings, and people just sell like themselves or their memes or some shit like that. I don't know. I'm just like talking out my ass right now, but I'm thinking like, what will like the next like you know money grab Ponzi nomic thing look like? And it could be anything. It's just like, the same thing wrapped in like different gift wrapper.
Mhm.
Yeah, no, absolutely. On the note of airdrops, did you guys see the thread? It came out recently of like looking back on the Uniswap, I think a couple years later or something like that. And
Oh,
basically,
yeah.
yeah, this thread just came out, and I don't know the exact numbers. Maybe you guys can, when you're editing it, like pull up the article or the thread on screen. But something like 90 something percent of people that got the airdrop like have sold. 90 something percent did not contribute to governance and like did nothing with the project itself after. And yeah, it just made me think like, I think the folks that are designing the next Uniswap right now and whatever that may be will probably think about it a little more precisely than just like a blanket airdrop. But we'll
I
see.
mean,
I mean,
when it,
you have to
yeah,
distribute a token somehow. So
yeah, when it comes to airdrops, it's just like one small part of tokenomics. And with tokenomics, you're asking yourselves, what actions do I want to incentivize from the community? And so,
yeah,
like, and like from based on like what you're doing, whether it's like an NFT marketplace, whether it's a stable coin, whether it's an exchange, you're like, okay, like what do I want to incentivize the user to do, and will it benefit me? And like some things will work because it's like the first time something's being tried out. I think like Curve, the VE system, perfect example. Then Frax doing their version for a stable coin, worked perfectly for them. And then like other VE systems come out. I guess we're like yet to see how they work out for like other systems, but like VE was like meant for Curve. You know what I mean? And I'm sure in the future, like there'll be some new novel tokenomic mechanism that everyone's just gonna like. It's gonna be perfect for the person who tries it out and project who tries it out first. But then you're gonna have like your forks and copycats and stuff.
yeah. Out of curiosity, like I'm curious what. So it sounds like you're very much aligned with the VE system, or at least believe it to be the best option that we have now, at least for Curve and Frax. Like I'm
Mm-hmm.
curious, like why you think that. Because I go back and forth on it, and I'm certainly not
Yeah,
like
I was gonna
convinced of
actually
it.
ask. I was actually gonna ask you that as well. But like, why do I like the VE system? I think to answer for Frax, I think the one of the most important things for Frax is to able to like lock their stablecoin and lock liquidity, and to be able to incentivize that. And like the VE system, like right now, has been the best system and has proved itself to be the best system to do that. Because like in order to have a stablecoin, you need liquidity, and you need to have it locked for a certain period of time. And I'm sure in the future there'll be like other like mechanisms that built on top of Frax, or whether it's built by Frax or a third party, that allows people to lock Frax for whatever reasons. Maybe it's like a quasi CD account. But I mean, like you look how traditional banks work, or like your local bank down the street. You can go open a CD, a certificate of deposit. You're basically locking your dollars for like X amount of years, and then the bank can do whatever it wants with it. Like you need the same thing in DeFi, and that's how I kind of view the VE system. And for Curve, like I think that they had the first mover advantage on it, and it was like very novel. I don't think it would work for every exchange, but I think for Curve, especially since it's a stable swap, and they're trying to, same thing. They're trying to like lock liquidity, and at the time, like that was the best way to get the most amount of liquidity. And they had like the highest TVL for a while, and this and that. Now it's kind of proving out with Uniswap V3 that having the most TVL isn't the most important thing. But for it still is a big factor in something that matters. So that's my initial. What do you think?
Yeah, I think you make some great points, and I agree with you that it's a little different when we're talking stablecoins because like it does sort of make sense to pay for liquidity there. I think less so for other products. But
Mm-hmm.
for me, like the big thing that leaves me undecided about Curve, and I'm certainly not a Curve expert, I just have a decent enough understanding, is simply that like if you're paying for liquidity, like that liquidity would not be there naturally by design, right? Like you have to if you're incentivizing something and people aren't willing to pay enough for that product for it to be there naturally, it's a bit weird to me, right? Like the
Mm-hmm.
liquidity fees should simply match the demand, right? If the liquidity providers are not getting paid enough from the natural fees, then like there probably shouldn't be a market there if you're just looking at like a natural market. So like if you look at Curve, you notice a couple things. Like one, volume is pretty low relative to TVL, which is fine. Like we're in somewhat of a bear market. Um, And if you also look at fees, like some of the pools charge 1 BIP, 3 bips, 4 bips. The reason they can do this is simply because Curve holders are subsidizing that by Curve emissions. And of course, Curve emissions go down over time. The Curve, most people, don't know most, but a good portion just sell the emissions to like accrue some sort of profit. They're selling to ETH or dollars. And so we have less emissions coming in the pipeline. We have continual sell pressure. And I just don't know where that ends up. I suppose like the only out for Curve that I can imagine is that it becomes like this currency hub where people like this is like the liquidity sink where all liquidity lives. It attracts a massive amount of TVL. But I think my hunch is like with Uniswap V3 for everything that's not a stablecoin, and even stablecoins do have like tighter ranges on Uniswap V3. Like Uni V3 is just a better mechanism to
Yeah.
provide liquidity. And so I just think like, if you're subsidizing this, if Curve holders are subsidizing this, it might make sense, but I just wonder what happens as incentives trickle down. It's sort of like the Bitcoin halving problem, right? Like at
Yeah.
what point do the rewards not justify miners for Bitcoin
Yeah,
fees?
I guess the idea with Curve, it's the emissions are bootstrapping liquidity, and like hopefully, and like the idea is at some point the fees will eventually like reach equilibrium, or like be worth it, like more so
Yeah.
than the subsidies. But I agree with you on the Uniswap V3 points. I actually heard that there's actually more stable swap volume on Uni V3 than there
Hmm.
is on Curve, which I found to be an interesting statistic. The thing with Uni V3 is like they have real yield, like especially for those 1% like exotic pairs, especially at the beginning, and with the majors too. Like so Uni V3 like definitely like is probably stronger as a mechanism right now than like Curve V2, but I think it's like if you look at like the bigger picture too, I think Curve is much farther along being like in the DAO space, and farther
Hmm.
along as like being an on-chain entity and interacting with other entities on-chain than Uniswap. Uniswap hasn't done shit in that area, and like we're gonna see like how much it matters in the future, because like at the end of the day, it could just come down to like numbers and people just go to Uniswap V3. But if I'm thinking, I know I'm like kind of shifting the subject from like a DAO's perspective. Like I put it this way, like with Curve, Convex, and Frax, like the cartels are on chain. Exactly who's like has like the VECRV. You know exactly like how you can see
Yeah.
on chain how it works. With the Uniswap V3, and with Uniswap Labs, I guess I call it, like the cartels are off chain. They just like raise this huge round, like 155 million to like all these VCs and stuff. Like, why are they raising an equity round if they have like what are they exactly doing on chain? So like that's like the one thing. Like that's why like I lean a little bit more towards Curve, because in a sense they're like DeFi native, but like I'm still like Kit can tell you I'm the sucker for the V3 mechanism.
Yeah. So
Yeah, Dave, I
let me
think
jump in here.
Yeah.
Just
I was
real
just
quick.
going to give some
I want to
immediate.
talk. Okay, go ahead. Go ahead. Go ahead.
Yeah, just some immediate thoughts. I think you raised two great points, Dave. The first is that Curve is like truly on chain, and that like everyone building Curve is trying to drive value to Curve, whereas I think at Uniswap, the team, and this is a hunch, is focused on driving value to the equity, not the token. I think like it's pretty apparent if you just look at the action. So definitely a point to Curve there if you're a CRV holder. And I think the other huge thing that you sort of alluded to at the Dow point is that Curve does have much better UX. Like for an average person like me, you guys, anyone watching, it's very simple, right? Like you just deposit one asset, you're taking price exposure to the other, but you're not really setting a range. This is sort of like all done for you in the back end. And it allows you to be more composable. Like Frax can build on top of you, other people can build products on top of it. Whereas with Uniswap, like you have to be pretty sophisticated to be competitive. And that's good and bad, right? But like from an average Joe's perspective, like it's certainly much easier to provide liquidity on Curve
Yeah.
than Uni and do so
Yeah.
profitably.
And Uniswap has it. Well,
Mhm.
Kit, I'll let you go because I know.
Okay.
Yeah, same
So
thing.
I just wanted to double click on the thoughts on the VE element first. So for Curve's point specifically, I think Curve's product is not just the DEX. I think Curve's product is twofold. It's both the DEX and the CRV token. Like the gauge system of Curve is a product in and of itself. That's why you see all these bribes and all these other periphery things being built on top of Curve, not just the DEX, but the CRV emission itself. So I think that's kind of the way you kind of have to think about it for Curve versus Uniswap, is that the CRV token is one of their products. That, hey, we'll help you grow by giving you some of our token. Tell us where to direct it, and then projects can kind of build on top of it. So a project doesn't have to use their own native token. Whereas Frax just goes ham and uses Curve and FXS to really drive liquidity. So that's kind of the way I see it. And I think we got to think a level deeper onto the vote escrow mechanic, like in general, how once you lock up your VE tokens with Convex does this thing where they separate control and cash flow. CVX CRV holders have access to full cash flow, but they do not have access to control because they can no longer vote. Only CVX or VLCVX token holders can vote. So all those CRV people willingly gave up control for more cash flow. And I think that is what's interesting with the VE tokenomic model, is where you can now modularize cash flow and control of a protocol into two separate products. And then there's like staking or locking derivatives like pitch FXS or a CVX FXS or all of these other kind of liquid locking wrappers kind of comes out, which adds more to that control versus cash flow mechanic. Yeah. Yeah. I think about this a lot. So
okay, I remember like me and you talking during the spring, trying to like figure out like what was going on with like Frax and Convex and like and everything. This like kind of brings me back to that. But no, it's an interesting point. Like the VE system, when you break it down, even it has everything like bundled together at first, and then when you build on top of it, you can like split it apart. But at the end of the day, like Convex is an aggregator. It's an aggregator of voting power. It's an aggregator of sharing revenue, and then they just take a cut on top of that. It's just a matter of like, is it sustainable? Can like the rewards of CRV keep up Convex like well into the future? Well, we can say the same thing about Curve. Yeah. Go ahead.
I think Curve, like I said, it'll be like, hey, you don't need to build a DEX for your token in your project. I have a DEX. Come use mine. By the way, I also have tokens to help incentivize your pool for you. So they kind of provide almost this whole business unit that you can just plug in. It's a SaaS, right? Curve is a SaaS product that you just come in, and the price
it's
you have
a
to
LaaS.
pay.
It's a liquidity as a service.
Yeah, sure. It's a LaaS. I think Justin coined that term a while back when he was working with his previous company.
It wasn't me. No, I can't take credit for that. I think that was Nate, the CEO of Ondo. But yeah, we did a lot of liquidity as a service.
Yeah. He was just lasting around. But yeah, so I kind of want to ask you, Justin, about like, where do you see the future of just like not just DeFi but of ETH as a whole? Because I know you're building something that is adjacent to DeFi, but I want to get your large overview picture first.
Yeah, I think right now we're in this phase where like everything useless is sort of getting washed out, which is probably a good thing. And I think we're seeing that like there were only really a few like crucial innovations that happened in DeFi summer. Obviously, like Uniswap being a great example, Aave being a great example, stablecoins like as a class being a great example. And I think the hope is right that more real world use cases that provide real value to people happen on chain. Like the hope is more value from the world gets put on chain, tokenized, and like frees people up to do more things with their assets. It's obviously like very, very hard to predict what the future is, but I think we all sort of like have an idea for what like common things are that we would like to see on chain. Like I don't play video games anymore, but when I was a kid I played World of Warcraft, and World of Warcraft has like an in-game economy, and I think that this is like the perfect example of like, instead of trading on the World of Warcraft system, like if that financial economy could live on chain, whether its own scaling solution or whatever it may be, that would just be a better system. I think like the idea of bringing real world assets on chain, like what you're working on, Kiet, is super cool and like something we want to focus on at Astaria. And it's very hard to predict what the future will be, but my hope it's providing real world utility to people and moving away from being like quote unquote a shitcoin casino, which is like what I think Ethereum and crypto in general has been largely, right? Like a lot of it is just thinking ICOs are the next big thing, but really we're just sort of gambling, thinking yield farming is the next big thing, and a lot of it was gambling, which has its purpose and it's fun, but hopefully like we provide real value in the future.
Yeah, no, I agree. Like I think with any like new technology, at first you have those scams and fringes and this and that, but eventually the quality does shine. It does take time. And then, first slowly, then all at once. I mean, that's exactly what happened with the internet. But I actually I wanted to go into your builder journey a bit before we got into Astaria, because, from when I first met you, you were at Brink and then you went to Ondo and then you ended up at Astaria. Like, how'd you start as a builder in the space, and what was it like being a builder and doing media?
Yeah, well, I was super lucky, so a lot of credit goes to luck. I never thought of myself as being in the crypto space. I never purchased crypto until right when COVID was happening. I can give like a quick backstory. So grew up in Connecticut, went to Boston University. I think I mentioned earlier I studied film there. So I worked in the entertainment industry. As soon as I finished at BU, I moved to Los Angeles, where I'm currently at, and worked in media and entertainment. So worked initially on the TV show Hell's Kitchen at Fox, and then moved to the TV show, the animated show
Did you meet
Family
Gordon
Guy.
Ramsay?
Yeah,
Wait,
I
what?
did
Wait,
once.
what? Wait. Okay, sorry. What was it like meeting Gordon Ramsay?
Well, I was such a low level production assistant. It,
Oh,
it was a terrible job. My job was to it was just manual labor, like scraping adhesive, using chemicals to scrape adhesive off the tapes so that they could reuse the tapes for the next season. I was just doing that
oh,
24/7. So it was brutal, but it
oh.
was it was a good experience.
Wow.
Um,
And then you got to Family Guy. Did you meet Billy?
Seth
No,
MacFarlane.
Seth.
Yes.
Seth, not Billy McFarlane. Seth MacFarlane.
Yeah, so he doesn't come in much anymore. He has a recording studio at his house for like recording episodes, but every so often when there's like a season finale or a big show, he'll come in and do a table read. So when the writers finish a script, pretty much everyone from the show gets together in a room and reads it, which is really fun. And so he did a couple of those. Um, but yeah, I was a director's assistant there, so like also like pretty menial. And I wasn't too satisfied, so I decided to get my MBA from the University of Southern California, which is where Kit and I actually met. We have a
Right
nice
on.
little meeting story. Kit's always been a really nice person, very gracious, and very welcoming. But yeah, so while I was there, I worked in entertainment at Paramount Pictures and strategy and biz dev, and then moved to Snapchat. And when COVID was breaking out, I was at Snapchat, didn't know what I was going to do, and someone I met there was like starting a business in the cryptocurrency industry, which ended up being Brink. So worked on that project for about a year. The project is similar to Gelato, if folks are familiar with that. So they're going after the same sort of like automation.
I'm a little bit familiar.
Yeah, yeah. Um, so so did that, and then moved over to Ondo, where Ondo's pivoting now quite a bit, building something quite a bit differently after like the learnings they took from the liquidity as a service product. But basically, at Ondo, we like partnered with a lot of stablecoin issuers, Frax, Fei. We were going to partner with UST, and then unfortunately or fortunately, Luna collapsed. And I think there were a couple other stablecoin providers we partnered with as well. And we were basically like trying to market make on chain or provide liquidity on chain. The program grew pretty quickly, just because like DAOs truly, as you guys see with Frax BP, like DAOs truly need liquidity, and it's expensive to get. And so I think the project at one point had $100 million of TVL. Um, and I just really learned a ton there. And I was continuing to put out content, build an audience, and I met my co-founder Joseph DeLong, who was the former CTO of Sushi Swap. We hit it off. He shared a little bit about what he wanted to build, and I told him it was a fantastic idea, and we decided to basically run off and raise money and start what's now Astaria. And I've been working on that since March, and I just feel truly grateful. I mean, the stars sort of aligned. I'm grateful I found
Stars
crypto.
aligned.
Yeah. I'm grateful that we raised money at the right time. I think I really feel for teams that are trying to raise now. I mean, you can do it, but you're going to raise less money at a worse valuation. It's just going to be harder to find the right people and build. So feel really grateful, and we're gearing up for a launch in January now. So just about a month and a half away from launching.
Yeah. Oh, Joe was one of my first interviews when I had the Gelato podcast going. And this was
Really?
right, yeah. And this was right around the time it was like right after ETH in 2021. So he dropped his like life story thread. And I was like, damn, that is a hell of a story.
Yeah,
And
Joe's a great
yeah,
guy.
I'm a huge
I've
Joseph fan. Yeah.
Yeah. No, I've learned a ton from him. I mean, I just feel very fortunate to be working with, and it's not just Joe, it's the rest of our team too. Everyone on the team is, I think, best in class at what they do, and so it makes everyone's job just so much easier, and that everyone's a top performer. So
I have a
Yeah.
great story about Joe saving me on my cross country road trip. So I was driving across. I somehow ended up in San Antonio when I was driving across the country. I had no working cards. I bet like I had like cards on my phone, but like since it was Texas or wherever I was in Texas, not everyone would take Apple Pay. I would say like less than half did. And so I was just like, I was struggling, man. And anyways, I end up in San Antonio and I have lunch with Joe, and I've like talked to him online before, so it's like my first time meeting him. And like I like explained to him my story, and he was like, "Dude, I got this lunch. Do not worry about it. Like, or do you need anything? Do you need money?" I'm like, "No, like I'll figure it out. Like, trust me, I'll be fine. Like, I'm gonna meet family in Arizona." But like, at a time when it was like when I was like down bad in my life, like Joe was there to help.
Yeah. I feel very grateful for it too, because I mean, trust is so important when you're co-founding something, and especially
Oh
me
yeah.
as like a, a normie that cannot code, right? I'm not an engineer, so like to not have that insight is tricky, but knowing that Joe has it is important. And then
And
yeah,
Joe's
like
been
to your
through it.
point,
He has. Yeah. Go ahead.
no, I was just gonna say, and Joe's the type of person that would make sure that your outcome is good before his is, right? He'll always look after you first, which is such a great trait.
Yeah, I mean, and he has the experience too from like his time at Sushi Swap and before that Consensus, and
Yeah.
big Joe simp over here.
Yeah, I mean, I'm a big Joe simp, but I'm also a big Justin simp too, right? Like
Yeah,
Justin, he's not gonna toot his own horn, but I feel like he's gone through like such pivotal roles in his journey as a builder to kind of get to his position right now as the CEO, right? He has not only a business background from the MBA program and kind of geared him right up. He got his hands dirty, helped build Brink, helped BD the shit out of Ondo, and now like he's like helped with the raise. I would feel like it's the combination of the both of you is what resulted in such an amazing raise and for such an amazing
the
product.
1-2 punch.
The
Yeah,
1-2
thank you.
punch.
Yeah,
And
it's there's a nice yin and
J
yang
and
there,
J.
so I appreciate it.
yes,
Yeah.
J and J. But now, of all this pent up teasing of the audience, please tell them, what is Astaria? What are you guys solving, and how can they learn more about it?
Sure. Um, so we are building an NFT lending platform. For folks that are familiar, there's like this is not applicable to Astaria, but to date, there's basically two types of NFT lending platforms. One type basically uses like what we call the floor model, and this is like JPEG or BendDAO. They'll basically say like we'll just talk about Bored Apes. We'll say like if you have an ape, we're always going to lend you this amount against it. We're going to treat all apes the same, and if the floor price deviates and you've borrowed too much, we're going to end up liquidating you. So the benefit here is you get like this instant liquidity. It's super easy. You just drop your NFT and you get this money out, and you don't have to really think about anything, and no one has to think about anything. So it's fast liquidity. That part works really well. But the downside to that is that most NFTs in a collection are really not floor pieces. So really only about 30% of a collection is floor. And so you're sort of like losing a lot of value here by just catering to like a floor loan to value ratio. In addition to that, and this is more of like a personal thesis, I think if you're creating an NFT project, to have the mindset that you're like going to end up and you're going to end up with fungible assets as opposed to non-fungible assets, which is sort of like pseudo swaps model where we're going to spin up a pool, everything in this pool we're going to treat as the same, everyone can trade against it in the same way. It sort of defeats the purpose of an NFT, and I don't think that's where the future is going. Like I don't think the future is going to be these 10,000 PFP collections. I think we'll talk about like what the future of NFTs might be in a little bit, but yeah, so that's the first model is this like auto liquidation floor loan to value ratio model where we're treating everything the same. And then you have the other end, which is best exemplified by NFTFi or NiftyFi, and they're probably the market leader to date, and they've done an incredible job at like building out their business. And their model is basically the complete opposite. They say each asset is unique. If you want a loan, you have to put your asset in our platform, and then people can give you bids. You can negotiate something in Discord. Each loan is going to be customized for that unique asset. So the advantage here, of course, is that we're respecting the non-fungible nature. We're giving you an accurate, fair valuation, or presumably fair, right? Like both parties are agreeing on it. But the downside is it's very manual. It's very slow. It's not too competitive. You might not get too many bids on your piece, and it's not instant. It takes a while. So in our view, neither of these are perfect solutions. So we decided to come up with a different model, and we call this the three actor model. So we have the borrower and the lender, and we add a third actor that we call the strategist. So the strategist role is basically to be the appraiser for the entire system. And there's actually already a lot of companies that are exclusively focused on appraising NFTs. Some great examples would be like Upshot, Deep NFT Value, Spiciest, NFT Bank, NFT Valuations. I think Zapper does it as well. There's about 10 companies or so, maybe a little more, maybe a little less, that appraise NFTs basically professionally. And so we're working with all of these folks to be strategists on our platforms. And basically, the strategist can say whenever they want, I'm going to spin up a vault. In that vault, I'm going to Merkleize and post any number of valuations for any number of NFTs I want. They can appraise 10 NFTs, they can appraise 100,000, a million, whatever they want. That vault, that all those appraisals make up a vault, and then anyone can provide liquidity to that vault, saying that they like those terms and they agree to it. And then, of course, anyone can borrow from it, and that liquidity is available for them to borrow instantly. So we think it's a pretty unique and novel approach, and ultimately we're excited to see if the market's receptive to it in about a month and a half. But yeah, that's like a high level explainer of what we're building. I'd be curious to hear your guys' thoughts.
I want to learn a bit more about how the strategist vaults like operate. Could you share what are some parameters that these guys are setting and things of that nature?
So the strategists basically have to determine three things. They never actually have to state the value of the piece. They just have to say how much that piece can borrow. So there's no like concept of a floor price. There's no loan to value ratio. It's just this Bored Ape can borrow 60 ETH. This Bored Ape can borrow 55 ETH. So they set the amount you can borrow. They set the duration, which is just how long the loan is, and then the interest rate. And all of these strategists are always competing. So on our platform, obviously the best terms get bubbled up. And so these strategists are competing to offer users the best terms, which we hope will bring rates down. As far as like how the strategist actually does that work, a lot of that is sort of like back office calculations.
Mm-hmm.
Pretty much all of these platforms that we've talked to, they have their own models that they basically ingest data, look at historical sale prices, volume, whatever it may be, and they built a model unique to each collection, and then fine tune it from there.
So how do they select which collection to do, or more rather, how do they select which NFT within that collection? Like I want to do Bored Ape 101 and I want to do Bored Ape 296. Like how would they select these apes?
So each NFT has a token ID attached to it, right? So
Right.
the data is all available to the strategist, and they could say like token ID 262 is good, 263 is good, 264 maybe that was a stolen NFT or it has bad traits, like we're going to lend less to it, and that would be the approach they would take.
And I, as a token holder of token ID 262 of this Bored Ape, I would come in and just kind of filter by my wallet, and I would see like all these vaults that could apply to me, and then I choose which vault to LP into.
Yeah, it's a good question. So if you're the borrower, what happens is you come to the platform, your wallet's connected, and then for every NFT that you have a strategy for, all you have to do is click one or two buttons and then borrow that amount of capital against your NFT, and your NFT gets locked into a smart contract until you repay that debt. From a liquidity provider's perspective, this is sort of the other side of the coin. If I'm lending, if I'm like trusting a strategist to post correct values, or I like the values I'm seeing, so I want to lend to that strategist, like let's just say Upshot, you really like them, you can lend to Upshot. You can see every single strategy they've made. You can see historical performance, and then make a determination from there. You can also say independently, like, I'm Kiet. I'm really plugged into the NFT space. I know what I'm doing here. I can spit up my own vault. I can write my own strategies. I can lend to my own vault, and then people can borrow against that. And you can, of course, get interest payments for doing so.
Oh, I see. So I can be my own strategist while also being a borrower as well.
Exactly. Yeah.
Interesting.
Is that what you expect people to do, or also do strategists get a cut? You said of everything, like interest payments, or how does that work?
So strategists, you can think of it just like a urine strategist. So they're getting it's configurable, but like we're assuming strategists will get basically 10% of profits, and they're only getting paid when the vault performs well. So if the vault makes money, the strategist makes a little bit of money as well for writing those strategies. And I think you had another question in there that I forgot.
So do you expect most people to be strategists or borrowers?
I don't know. I think the strategist role is pretty challenging. I think Some folks are probably like really experts in niche communities like NounsDAO. Let's just say they really know the NounsDAO community and can write competitive terms. So in that case, it might make sense, but it, I think it'll probably be pretty hard for like an average individual to compete on a broad scale with these platforms that have built models to value, 30 collections, 50 collections, etc. But we'll see. I mean, hopefully the best terms win. So
What collections are you launching with?
So it's totally up to the strategist. The strategists we talk to have like a total wide range of what they cover. I think we'll probably launch with, let's say, 5 to 7 strategists, but we'll see. Some strategists are hyper specialized on just CryptoPunks. Some are hyper specialized on just apes. Some do the top 10. Some do the top 20. I think one even appraises 700 collections. And so there's like a wide gamut here of folks that are trying to cast a wide net and then folks that are trying to be really precise and know a specific collection really well. I also just wanted to like we were probably going to transition to talking about the future of NFTs. So like one of the things we're trying to do is expand in people's mind what an NFT is when they think about it. And so like at launch we'll be supporting loans against Uni V3 positions, which are of course NFTs and something that hasn't been done before, which we're really excited about. Then loans against Liquidity's chicken bonds. If you guys are familiar, it's a pretty interesting product. So our goal is to like expand beyond just art and include these like financial products, and hopefully whatever comes next in the NFT space we'll support as well.
So Justin, could you walk us how a Uni V3 loan should work, and like what are some reasons why people would want to take out a Uni V3 loan? Is it they're bearish on a position, and like is in a way like, can you think of it as like reverse impermanent loss if like you think like it's not going to stay in range?
Yeah, there's a couple reasons to. I guess I'll start with why you would take a Uni V3 loan. I think there's a ton of reasons. The first is that like in some ways with our setup, because we don't have forced liquidations, we only liquidate if you miss your payment. You can actually think of these loans as options. So you're almost getting like an option against your position that sort of can hedge your exposure. The other reason that comes top of mind is that you can actually lever up your position now as well. So you've borrowed, let's just say you have an ETH USDC position, you've borrowed 80% of the value in ETH. You could now put more capital into that position, and then all of those fees that you're getting like can automatically pay down your interest payments that you would owe to the person lending you that capital. So that's like some of the obvious reasons why you'd want to borrow, just freeing up your liquidity. As far as how it works, basically a strategist sets an appropriate range that they're comfortable with and then sets tokens that they're comfortable with. So if Kit's a strategist, he could say, I'm only comfortable with, let's just say, ETH and Frax, anywhere between $800 ETH, 800 Frax ETH, 800 Frax per ETH, and 1600 Frax per ETH. I'm willing to lend to you. If you have a position that fits those parameters, you can instantly get capital and borrow. If you're out of that range, Kiet might not be comfortable as a strategist lending to you, but maybe someone else is. So,
I want to touch on. I just want to touch on a point there. So, something that I thought you said was interesting is think of it as an option, and I think that's one thing you're seeing with a lot of protocols building on top of Uniswap v3 is that they're thinking of Uniswap v3 itself as a primitive to build options on top of. And another product I heard that's doing that is Panoptic, and they think of it in the same way and can like lever up on a position like that. So I think like to like the credit of Uni v3, and I feel like we're only scratching the surface of what is possible and what financial primitives we can build on there with that. So it's gonna be real interesting to see like what complex strategies the strategists will come up with in the Astaria system.
Yeah, we're excited about it. So when you basically lend to a vault, you're getting standard ERC 4626 tokens, which if folks aren't familiar is this like standardization for yield bearing vaults. And so like we don't expect this at launch, but these tokens are very composable. Like we're expecting people to provide liquidity for these tokens potentially in the future where you can easily exit and enter your loan position, where you might be able to like get some sort of like wide blanket exposure to the NFT market without buying a specific NFT. It sort of allows you to do some really interesting things in like these derivative projects that we're excited about. But obviously we just want to see if we have product market fit with the easy stuff first.
Yeah, we're getting deep in there.
I
Yeah.
want to double click on the liquidation mechanic because what you said just kind of slept right under the radar there. Could you walk us through how the liquidation works?
Yeah, it's a good question. So right now, so liquidating NFTs is like one of the hard parts of NFT loans, right? That's why a lot of
Right.
projects like bend out, just liquidate it based on the floor price. And like if you're close to that floor price, they're just going to force liquidate you.
Yep.
We have something that we call no forced liquidations, which is similar to NFTFi's model. With NFTFi, they actually give the lender the loan, but because we use vaults and anyone can provide liquidity to a vault that writes strategies, we can't just give that vault the NFT. Like these LPs want their capital back. And so we liquidate with a Dutch auction through Seaport. The advantage here is that you guys probably are starting to see with like a lot of NFT collections, there's like limit orders basically placed for those assets. There's like open orders placed. And so basically like anyone can bid on this Dutch auction, but of course like MEV bots are always watching Seaport. And if they can ever, there's ever like an offer on that collection, they can instantly liquidate it and sell. So we use like I think it's a 36-hour or maybe 48-hour Dutch auction.
Okay. And you said something about the interest payment, and if you keep on making that, then there's no liquidation. But what if the asset, let's say this NFT value just completely craters? Like, what happens then?
Yeah. So to like, let's just make it more clear. Like, let's say your NFT was a nice NFT today. You borrowed 10 ETH
Yeah.
against it, but in like a month's time, no one cares about this thing. It's worth 0. Let's just say. So
Right.
as a rational actor, as your Kiet, you're very smart. You're going to say, I'm not paying down this debt. Like I have 10 ETH. The protocol can take my NFT. And in that case, like, so the protocol tries to liquidate your NFT. Will try to get as much capital back, or the protocol tries to get as much capital back as it can, but ultimately like losses are inevitable. So a lot of people I think in the DeFi space have this mindset of like yield without risk, or like these products that only accrue value. But of course the world doesn't work that way, and like there will be vaults. Like if a strategist does a poor job writing strategies, there will be vaults that lose money. That's just how it is. So um, yeah, there's definitely no
Right.
doubt in my mind like some lenders will lose capital for sure.
Yeah,
So
I think
so bad debt is a feature, not a bug in this situation.
I don't know if it's a feature. It's not ideal, but hopefully the strategists do a good enough job pricing risk that it's fine, right? So like if you have a vault that's the aggregate of 100,000 pieces and 100 default, but the rest are fine and they pay their interest payments, as long as the vault has a positive net return, it's something we can live with. If the vault gets totally blown out, that's like very unfortunate. But we think like the strategists we're working with are really talented and they do a great job. A lot of that is public. Like you can look at what Upshot is doing, what NFT valuations is doing, what deep NFT value is doing. And I mean, frankly, if the lender chooses to lend to those terms, they're agreeing to take on that risk. So
Got
Yeah,
it.
I think I want to go back to something you said. Like people in DeFi sometimes don't expect the laws of finance to like work. They just think everything should be up on look is up only. Like we're in this new field. Like oh maybe it's different this time. You definitely saw that a bit last cycle, but at the end of the day, like the laws of physics are the laws of physics, and must what goes up must come down. Planes can't fly without abiding to certain laws of aerospace, and finance works the
yeah.
same, whether it's on chain or off chain.
Yeah, it's really interesting in the NFT space. If you look at NFTFi on their Dune dashboard, the average APR for their loans is between 40 to 50% in ETH terms, which is crazy, right? So like if you're a sophisticated lender, you're making a 40 to 50% APR on ETH. They about 10% of assets on NiftyFi, which is a great comparison, go to liquidation and presumably don't recoup the costs. And so like theoretically, or I guess hopefully their lenders are pricing that risk in and still getting a positive return. Now it's our hope that we bring that 40 to 50% rate significantly down, because in our view their model is less competitive. There's not strategists competing with each other constantly, whereas on our platform strategists are only getting loan origination if they're offering the best terms for that asset. So who knows what the rate will be, but I think the going rate for NFT lending will be like 20% probably for blue chips, like maybe 10 to 20 for Bored Apes and
Is
Punks, and
yeah. Is that
increasing
like
from there.
one of your central kind of like KPIs per se? Is like how low you can get the interest rate to go, and like that's a measure of like how efficient you're making the market. So I feel like that must be
Our first goal is just loan origination. There's about
Mhm.
600,000 to $1 million of new loans taken against NFTs per day, which is pretty decent for the bear market.
It's
And we
crazy.
just want to capture
Yeah.
as much of that as possible. Ultimately, like I think the rates will do a good job of settling where they're supposed to settle. So we're really just worried about loan issuance.
It's only 600,000 to a million. I feel like there's so much room for that to grow. I feel
Yeah.
like you're really at the ground floor of something, honestly.
Oh, thank you. Yeah,
Yeah.
we hope so, and we're excited about I mean, there's a lot of capital on Uniswap V3 that is not
Yep.
well, it's providing liquidity, but people can't get any liquidity against it, and we're excited about that and what that might bring too. So
Yeah. I
Yeah.
think that's super interesting, right? Because if I were a, LP to the LPer, meaning I'm the liquidity provider to the liquidity provider, I get Uni V3 yield or a partial piece of that without any of the price action or anything that might impact me. So it's like a really nice rev share model there. And you obviously know the underlying asset is ETH and, Frax per se. But
yeah,
Justin, I want to ask you, given that you're kind of here on the ground floor, what does success look like?
in the crypto space or just in
No,
general.
in Astaria's from the perspective of Astaria, like what does success look like? Is that like a billion loan originated on Astaria or X?
I thought we were going to get very philosophical, but
No, no,
no.
no, no.
The company mission is to provide instant liquidity for any on-chain asset, and so today that might be your art NFTs, your apes, your punks, your Uni V3 positions. But as we see more value go on-chain, we want to be the source where folks get instant liquidity against that. And our model is a it's like we're very focused on NFTs now, but of course it works. The same type of lending model works for ERC20s. It works for any digital asset. And our goal is to capture as much of that market and offer instant liquidity for anything that has value on chain. So
I have another question. Actually, Kit, do you have a follow up to that?
No, no. Go ahead. That's good.
Yeah. So I think I'm coming around to being a DeFi Trinity fundamentalist. I'll put it that way. I think like that is the way you view DeFi. Is like they're not like whether it's like the AMM, the lending platform, and the stablecoin. They're not separate. They're all one and the same. So going off of that, are there any plans in the way future, for Astaria to release their own stablecoin or their own AMM? I feel like a stablecoin would be more likely. Like the once you like launch and get traction and get market share, and you reach your point of saying like, hey, we can create our own mechanism to create our own stablecoin. Have you guys thought about that at all? What's your take on
honestly,
that?
like we haven't, and it's just because getting the
Yeah,
first
build
thing
a
done is so hard.
yeah.
Yeah. And
Yeah,
we
that's
don't
true.
even have one user yet. So like we don't even know if the market's receptive to our product. And
Uh,
I think
I'm
I
getting
think
too
everyone
ahead
on
of
the
the
team is
curve.
just
Yeah,
everyone
yeah.
on the team, we're all just focused on getting that first user. And then, if we had some like crazy breakout success, which would be amazing, then we can start thinking about that. But yeah, we've all just been like laser focused on this one goal. And we're a small team too. There's only 7 of us now full time. And so like we're all pretty busy focused
That's a
on
solid
this
size.
one small problem. Yeah.
Yeah,
Yeah.
you guys are nimble enough, but I'm sure everyone's highly skilled, especially knowing you and knowing Joe, like
Mhm.
especially the people you guys would attract. So I'm sure you guys are in good hands.
Yeah, we have
So,
some great folks on the team. And if you're a great front end developer, please reach out too. We'd love to speak to you. So had to shill that.
bullish, bullish.
I'm on
Yeah.
front
Justin,
ends.
I,
Yeah.
I gotta ask, you have like a chicken or egg problem here, right? When you launch the platform, it's how do you get the ETH liquidity to come onto your platform first, or how do you get like an NFT holder to learn about your platform and to LP and hopefully wait for ETH to come in?
Yeah, it's a great question. We have the flywheel problem that Frax it seems has solved. So our flywheel is we need strategists to write good strategies that LPs LP into, that borrowers borrow. And if any one of those like 3 things doesn't work, the system doesn't work, right? Like if strategists aren't seeing any users come on, they'll stop writing strategies, then who's going to lend to it, etc. And so one of our go-to-market strategies that we're thinking about, because like I think in this day and age, it's a little senseless to sort of like launch with a token on day one. I think things have changed, so we won't have a token. But one of the things we've thought of is for everyone's first loan up until say $10 million, like Astaria will pay for the interest. And if you model this out, like if you assume the average loan is 60 days and someone's borrowing, X amount, it's not too expensive. And so like our goal to attract this initial mind share is to pay for everyone's interest payments for their first loan up to like $10 million or something. So we'll probably run that program at launch. Hopefully that sparks this flywheel, and then of course we'll see what happens.
I see. So it's like a free toaster when you open up your bank account today.
Exactly. Yeah. Yeah.
Free toaster. They actually did that.
Yeah, I know that. Yeah, but so have you sourced any initial liquidity from like on the ETH side, and have you sourced any initial large NFT collector on the other side?
Yeah, it's a good question. So, of course, we've talked about the strategists. We've sourced all the strategists for launch.
Sure.
We're talking to LPs now. We have like a pretty good chunk. I'm pretty confident. We have like an internal number that I won't share on the call, but we're pretty confident we'll hit this like pretty decent internal
Nice.
number. From the borrower perspective, it's a little challenging, right? Like we're doing our best to reach out to DAOs like Nouns DAO and these like other larger projects that have communities, but it's a little harder to talk to the borrower just because like Kiet you might have one punk and you might be interested in borrowing, but like we can't unfortunately talk to and reach every borrower. It's just not
Right.
scalable. And so we're trying to like figure out different ways to go about that. So of course, if you guys have any ideas, I'm all ears, but.
Yeah, that is interesting. How do you like attract those types of actors in the system?
Yeah, I wish you could just DM them and be like, "Hey, we got some
Just
vault."
DM them
This
one
is
by
one of
one.
This
You
is
up?
one of Joe's core competencies is his meme ability on Twitter, and so hopefully that'll pull through for us, and maybe I'll make a little YouTube video or something.
Oh, nice. Well, I'm glad you're gonna start making YouTube videos again, because I think the space, like you said earlier, that we're in this desert of content, and
Yeah.
we
It looks like it's
was
been 6 months. Like I checked your YouTube channel. It's just like the last thing you
Yeah,
said was
it's
what
embarrassing. Kit
what
and I
now
were just
after Luna?
Yeah, Kit and I we had dumplings the other day, and I've just been inspired by you guys like going after the content game, and it's so much fun, but it's a lot of work. I mean, it just takes a lot of mind share to always be in that mode of thinking about content and creating it, like aside from just the work of putting together video. It's a lot, and unfortunately I haven't had time with Astaria, but I think like as things slow down, I really want to get back into it because it was so fun just having an engaged community and being able to bounce ideas off folks and whatnot.
Yeah. And we've been grinding at this. Every week we've come out with a podcast since June.
Yeah,
We
it's
haven't
tough.
missed a beat. Yeah. It's a team effort for sure. It helps
The
a
only
lot.
thing I could say, it's like the gym, right? Like if you miss one day, the next day after is so much harder. So like just never miss a video, and then you'll be good. If you miss one,
Yeah.
you start cheating on yourself.
And no, we're pretty disciplined in that regard. And especially at the beginning, for everyone out there that's thinking about it, like the most important thing is to be consistent at the beginning, and that sets your foundation for everything else.
Yeah.
And now we're just building on top of that. We have so many different shows, segments, offerings that's in the pipeline for Flywheel that we're super stoked for 2023. Like
The best is
gonna
yet to
be an
come.
amazing year.
Do you think in like 3 years, Flywheel will be a brand that's totally, it obviously covers Frax, but is like just totally DeFi focused and not just Frax? Or do you think you'll always be attached to Frax?
I think we'll always be attached to Frax in some way, but I think we'll definitely grow out of just Frax. But Frax will always
Yeah.
be, I like to make the comparison what Bankless is to Ethereum, like Flywheel is to Frax.
Oh, interesting. Okay.
Yeah.
And also,
Cool.
we're obviously bullish on Frax itself, and we're bullish on the stablecoin space overall. And I believe like the killer app from this whole DeFi casino that we got to play around the last 2 years is that stablecoins is the killer app that actually survived and is still clearly rocking, right? And that's kind of where we want to plant our flag on. And without stablecoin, DeFi is completely bricked. Right. Imagine USDC or USDT never actually, brought on more stables into the ecosystem. Like the DeFi would literally be nowhere. The most liquid pairs to borrow, the most liquid pairs to trade is paired against a stablecoin or ETH.
People want stability.
Yeah.
Yeah.
So what are your guys' thoughts on next steps for Maker? Do you think Maker has a place in this space that's
Yeah,
going to remain in
absolutely.
this space, or?
Yeah, no, absolutely. It depends what path they take. I'm still bullish on Maker into the long term, and I think they're making a lot of the right moves. Like from what I saw, they're cutting like a lot of fat and like they're slimming down. It seems like they're slimming down their team a bit. I think what they're carving their own lane in the commercial banking space, whether you like it or
Yeah.
not. I mean, people like have their grievances against it, and for good reason. Them going the way they're going after real world assets is definitely unique. And at the end of the day, they're just trying to get the highest yield as in the most efficient way possible. And so I'm still like bullish on Maker into the future, but like they're definitely, and if you're like more of a decentralization, not even a maxi, but like care about it a little bit, I can see like how it can definitely be concerning. I really like the way Frax is going about it as well, with making like one of their main goals being, let's get a Fed master account, simple, to the point. You immediately know like what you're getting, why you're getting it. I like how simple and easy it is, and just like this is the one real world asset. We'll keep it simple. It's the safest one. It's the most reliable one. But in terms of Maker, I still like the direction that they're going. Like I see them being the commercial bank of DeFi
Yeah.
at this rate. What do you think?
I actually missed it. Can you maybe give a high level explainer? I've seen a little on the Frax Telegram about Frax's plan to like get get yield from real world assets or real world dollars, but I'm not too familiar. How is it different than Maker's?
Yeah, so Sam came
Approach.
on. Yeah, Sam came on the pod 2 weeks ago, and this is what he said. He was like, what is like the most risk-free rate in the entire world, and that's the Federal Reserve. And if we want to if we want to become the central bank of DeFi, like how the Federal Reserve is, like the central bank of the United States, we should emulate them. And the best way to do that is if we can get a master account, like literally like just a bank account straight up at the Fed. And what I found interesting, like probably like a few days after the interview came out, this news came out about FTX like buying some random ass bank in the
Yeah.
Pacific Northwest with like no website, $10 million of deposits. And it was just like, why did they like pay $100 million at that bank? Well, I'll tell you why. It's because they had a fucking master account at the Seattle Fed, and they wanted their own master account for when they were going to come out with their own stablecoin. Thank God they didn't. But if they did,
Wow,
they would have
really?
been So what you're gonna see happen probably is when they come out with their stablecoin and say like, hey, we have a master account at the Fed. We're getting this risk-free rate. We're gonna actually pass that yield on to anybody that stakes on the FTX platform. Like that was I'm inferring that was the plan that was gonna happen.
Yep.
And so like I'm sure Sam has been thinking about this for a while, but like others have thought about it too. It's just like a matter of like how to get. It's just think of it as a bank account, but instead of
Yeah,
your local.
do you know
Yeah,
the
go ahead.
structure? Because when I last talked to Sam, and I think you guys shared this on the podcast as well, there's like no real world Frax entity. Like there's no Frax LLC. I think
Yeah,
they dissolved the offshore corporation too. So like would the idea be to spin up a new corporation that basically does this exclusively?
yeah. It's funny because Sam prides himself on Frax is 100% on chain. We do everything on chain. I guess I wonder like how this would be structured. He didn't lay out a plan of like this is exactly
Mhm.
what we're going to do. This is exactly what we're going to form. I don't really want to focus on that on the interview. I just want to put out the idea and the meme into the universe of like this is what we're thinking. This is why we're thinking of it. But like a few ways I would speculate on is I think probably the easiest way to do it would do like a reverse takeover of a bank that already is at a Fed through like some entity, and like through that entity like the DAO owns. I don't know, like I guess like since DAOs are like legally recognized in Wyoming, can like DAOs own? I'm asking. I'm not sure if this is true. Can DAOs like own banks? Like I don't. Who knows?
Well, you got the Frax DAO should bid on the SBF bank, whichever. I saw a picture of that bank. It's the most
Yeah,
ridiculous
yeah,
photo.
yeah.
You guys should try
It's
to buy that.
yeah. It looks like a restroom in the middle of like on a highway. Like it looks like a half bedroom apartment or some shit.
Yeah,
Honestly, it's
it's
like the most.
hilarious.
And it's just like that has it kind of goes to show like what does it really take to get a master account at the Fed. Honestly, it does take honestly like what kind of bank will Frax would make a good candidate? I don't know, but I'm sure they're exploring all options. It's like, and I know like they would rather get this done sooner. They would rather get this done sooner rather than later. Like they don't want this to be like a 5-10 year dragged out process. Like it would be cool if like something could get done between like 6 months to 2 years. But
I think it's a great idea, right? Because people hold USDC, and sure, it's more safe, but like you're paying Circle that yield, right? Like Circle is taking that money from you, and why not bring it on chain? So
yeah, and like the structure of it, I'll find really interesting because like what he alluded to in the chat was like you would have you know what it would be? It was like you have like the dollars in the Fed master account, and then he alluded to FRX USD. That would be like the 1-to-1 to like the actual deposits at the Fed, and then it would be FRX USD that's backing Frax. So if you think about it in that regard, I think whatever FRX USD is would be like the entity off chain, whatever holds FRX USD, and however that looks. I'm just speculating here.
Yeah, and what's interesting is also, Justin, is if you have an account at the FMA, or rather if you have an FMA account, they literally publish your books and your balance like as part of their due diligence. Like I believe it's either weekly or it's some ludicrous thing that the Fed just forces. It basically is a insta audit every single time. So like even though it's a centralized entity, you still have full transparency into where the hell this AMO is actually. Like change FMA to AMO, and that's pretty much what it would transition.
Yeah,
that is very cool. I didn't know that. That's awesome. I'm very bullish on these things. Like I think there are use cases that deserve to be on the blockchain that aren't completely decentralized, right? Like there should be more real world assets on chain, which require a trusted third party. And like I think the more value we bring on chain, the better. And I don't and I'm excited for.
Yeah.
I just want to say one thing.
Go ahead. Yeah, go ahead.
Like everybody points out, like, hey, look at the treasury yield. The risk-free rate is 3.7%, 3.7%. All right, and ask the same person, okay, how exactly do you execute that to get that 3.7%? And I'll tell you, you will not get that 3.7% because you will go through a broker who would then charge you a fee. You would then cause slippage to actually get into the position because someone else is executing for you in a batched order. So like that 3.7% is not, quote, real for the retail person.
Yeah.
But why not? Right? It totally should be. And Frax USD would basically solve this. Like buying Frax USD, you would get that yield immediately.
Yeah, I'm all in for it. I'm here for it.
Look at the most successful real world asset on chain, which I consider USDC, and like Tether and centralized stablecoins. Like those are real world assets. Let's be real. There's like there's like short term bonds and dollars in a bank, and it's represented on chain. And like people don't think of centralized stablecoins as real world assets, but they are, and they actually like act so well at what they do. We don't even think of them as real world assets. It's kind of like, if you like have like a crypto product that it's performing so well, it's doing what it's supposed to do, you don't think of it as crypto. It's just a good product. You know what I mean? So I think that's like some food for thought for people. And now the idea is like, okay, like how do we get, we're not earning any yield off the short-term bonds, like Circle is earning those yields. Tether's earning those yields. How do we get those yields on chain? How do we get them passed on to, your average DeFi user? And I think Frax is sort of like the solution that goes straight for the jugular, like not like buying short-term treasuries through a broker or some shit. It's like, no, we're going to go straight to the source. We're going to go straight to like the ocean, straight to like the water, to like the top, the Fed.
I'm excited. It sounds great. I hope it happens.
Yeah, we're shilling hard here.
We're shilling super hard here. But I feel like just thinking about this topic and a DeFi protocol just going after it is like laudable. Just even thinking about like, hey, we're no longer just this obscure corner of the internet where we know there's shit coins and memes and internet culture and anime pics. Like this is real. We're going after the jugular.
Imagine like, if Frax like not only has like the risk-free rate of DeFi, which is ETH LSD, yield. It has a risk-free rate from the yield world. It has like the best of both worlds, which is pretty cool. Yeah. So Justin, have you looked into FrxETH at all? It's the risk-free rate of DeFi at the moment. Really, a lot of people are building their own version of LSDs. Frax recently came out with their version. Have you looked into it at all? What are your initial thoughts on it?
Yeah, my initial thoughts are like, one, it's great timing. Now's the time to do it, right? Right now, when deposits go in, they can't come out, and so like this, in my view, is the time when like all of these different staking providers can build up their market share. And so I think it's certainly a great move for Frax, FXS holders, etc. And I think like carving out Frax's own little lane in staking is going to be crucial. Like I don't know if Frax will ever be bigger than Lido or Coinbase ETH, but I mean this is going to be a huge market. I think only like 14 million ETH is staked. There's 120 or so million ETH outstanding. If you look at comparable POS networks like Cardano, I think the stake rate's like 60%. So like it's going to be a huge market. But I'm still like personally just learning the differences between FrxETH and some of the other models, and it hasn't yet clicked with me like the advantage of the FrxETH and having the 2 token system versus like Lido and their wrapper. So I'm still trying to work that out, but I think it's definitely a great product, and it's effectively allowing Frax to lever up on staking yields. Frax can basically like gather all of this ETH by subsidizing yields, paying a little more with FXS rewards, curve bribes, get all this ETH locked, and then sort of figure out the plan from there. So that's been my understanding, but I haven't, dug too deep in it personally.
You're definitely on the right path, but I think it comes down to what makes FrxETH different is both simplicity and the optionality that it provides. It gives optionality on how you want to use your FrxETH. Like with Steth, you can only have it like rebasing and stuff, and that rebasing is not very composable. Kind of limits you. Rocket Pool, it's this, basically the token accrues value over time. Sometimes there's issues with oracles there. But with FrxETH, with this 2 token system, FrxETH is, I call it Chad Weth. So like, it's basically like a more gas optimized Weth. And it basically, in the same way that USDC represents like dollars in a bank or like treasury yields and this and that, FrxETH represents ETH staked in validators run by Frax. That's it. But the only time you earn the rewards from those validators is if you stake in the FrxETH vault. If you stake in the 4626 FrxETH vault. And so, but not all FrxETH is in that vault. So you naturally have a boosted yield there. There's actually, if you're a little bit more risk averse and like want to earn more yield, you can go stake into the curve pool and then the convex pool and like the stake convex Frax wrapper bub, you know what I mean? And get rewards that way. And so those are the two main, actually there's the two main things right now. A third way was just released. You can actually lever up on your FrxETH in FraxLend. So you can take a loan out of your interest-bearing FrxETH. You can start looping it, which is really cool. And so there's going to be, so those are the main 3 ways right now. I expect more lending platforms to integrate FrxETH. It's like, I think it's the best constructed model right now for any liquid staking derivative. Granted, I have my biases, but like from doing my research, especially before our FrxETH episode with Jack, and if anybody wants to learn more about how FrxETH works, I highly recommend listening to that episode. But does that make sense, Justin?
It does. I'll definitely check that episode out. I think the one thing that's not clicking yet is like when withdrawals are turned on, it might be more comparable to say FrxETH is comparable to WETH. But like right now you are taking on the risk of the validator by holding FrxETH and not getting rewarded for it unless you're like putting that in some farm or something like that. So I don't think it's comparable to like WETH now, but I think it could be in the future, right? But you are definitely like taking on a little more risk now.
But what do you mean by a little bit more risk? Oh, because like you can't get the ETH back.
Yeah, well, like
okay,
ultimately, like a few things. One, like it's a LS liquid staking derivative, so the underlying ETH is not withdrawable right now. Like presumably will be in like 4 months when withdrawals are turned on, and you have to get out of the staking queue. But right now you can't withdraw it, and liquidity could dry up, right? Like unlikely because Frax is incentivizing it, but it's not fair to say it's, in my opinion, like exactly the same as WETH, because WETH is like a very simple wrapper that just holds the ETH, spits it in, spits it out. Whereas FrxETH, like today, you're taking on additional risk after withdrawals, like, and the security like guarantees are more there. I would say it's comparable, but like right now, you are taking on like some early adopter risk.
Yeah. Okay. Yeah, that's fair. I see what you're saying.
But of
and-
which
yeah,
you
go
are
ahead.
compensated for.
You're
this extra
compensated
risk.
for. Yeah.
Just like how
If you do
this is the
something with the
yield.
token, yeah.
Yeah.
Actually, the market is surprisingly efficient. We have 32.99% in the FrxETH vault. Then we have the other 66% in the curve pool. So we have this
That's funny.
0.01% of FrxETH that is just chilling in the ether. And I have no idea what these guys or gals are doing, but I don't know why are you not putting it to work. It's so surprising.
Yeah.
So I think it's a super smart model for Frax, the community, because it basically, the way I think about it, it allows you to double how much ETH you get locked up in your validator set, right? Like if you're Lido, you can only get X amount of ETH based on the demand for staked ETH. But because like you're able to split out the yield from the validators and the yield on Curve and from FXS, you can basically like double up and lever up and get like 2x the amount of adoption, if like depending on how much FXS you use to bribe or Curve, etc. So I think it's a really smart move, and I hope Frax is quite aggressive about like spending that capital to attract that locked liquidity before the merge, because I think the people, the companies, projects, etc., that take that market share before withdrawals are enabled are going to keep a lot of it. So
yeah, and I expect, after Shanghai, I don't think the staking rate's going to go down. I think it's going to go up, and it's going to go up by a lot, because why wouldn't you stake your ETH? Why would you just have it sitting in your wallet where you can just throw it into FrxETH or something else and earn yield on it? So I wouldn't be surprised if the staked ETH in the future is 90%, honestly. Like, I think that, could definitely be a possibility. And if Frax, like,
you mean stake
like
FrxETH, right?
Or just stake all the ETH. If all ETH in existence, I think 90%. There's a chance that like 90% of it will be staked, because why wouldn't, especially like more sophisticated investors like into the space, like of course they're going to stake it. Like that's the risk-free rate of DeFi.
Yeah, this reminds me, I was on a BD call with Lido like 6 months ago. It was actually a really long time ago, and they said our like internal mission is that no one in the world holds raw ETH. Like they're just holding staked ETH or wrap staked ETH, like their products instead.
Yeah.
Because like, why would you just, if it's fully secure, why would you hold regular ETH, right? Like you're better off holding a staking derivative.
Exactly. Yeah. And Frax are the masters of stables. So it makes sense for them to come out with FrxETH, and be curious if they release any other stablecoins in the future. There are a few people asking in our chat, in the Frax chat, hey, like, will there be a Frax BTC in the future? I think if there's like ever enough demand for it, that would be like something pretty cool. But I'm not even sure how that would. Yeah. I don't even know how that would look. Fraxmatic. Oh, that just sounds cool. Fraxmatic. Right? Frax AVAX, Barafrax. I don't know. There's a lot of possibilities in the future.
Yeah.
And I know we're about to run to the end of our interview here. And Justin, first of all, thank you so much for spending the time with us today to kind of share about your journey and also what you're building over there at Astaria. And at the end of these pods, we usually do a series of rapid fire questions. All right. So I'm going to start with the very first one is, when did you first touch the chain? What was your crypto virgin experience? And buying on sexes don't count.
It was 2019. I don't know if I bought a CryptoKitty, but I was getting onboarded to crypto, and the first thing this person showed me was CryptoKitties through a MetaMask, and I was thinking to myself, this can't be the future of anything. This is absolutely useless.
And now you're the CEO of an NFT lending platform.
Oh shit! It all goes full circle, I guess. Yeah.
Oh, this is not the future of anything. And by the way, I'm going to allow a platform for you to lend against your CryptoKitties.
Yeah, I've since changed my position, but that was my first impression.
Also, and then second question is, what is your favorite off-chain activity? What is your favorite touch grass activity?
So I'm a pilot, so I don't touch the grass. I like to touch the sky. But
Wait, you're a pilot?
Clouds.
Yeah, when you're back in LA, Dave, we should go flying. I fly out of Van
Yes.
Nuys Airport here. So
Yes, I would love to go. Where's like the farthest you ever flew?
well, I've flown like the Grand Canyon's a great destination, the Bay Area from here. I've flown around Cape Cod in Massachusetts. Yeah, the planes have a lot of range, but like you don't have a bathroom, right? It's like you don't want to be sitting in there, and it's not the same as being in like a nice jet. These are propeller planes that are loud and clunky and uncomfortable, and that's part of the fun of it. But you don't want to be in this thing for more than 3 or 4 or 5 hours at a time.
Oh, that's so cool. Just take a quick trip up to the bay.
Yeah.
Just drive yourself. Is it
Yeah,
cheaper
I'll fly.
to fly? Is it cheaper to fly yourself or?
No, it's really you're only doing it because it's fun. So like I don't know, the costs are probably like $200 of an hour when you're in the sky, depending on what you fly. If you're flying like a Cessna 182, which is pretty standard, maybe like $200 an hour. So like it is cheaper to fly like commercial or to drive, but it's a lot more fun to fly yourself.
Yeah.
Cool. Dave, your question?
Yeah. What is some advice you'd give to your younger self, 5 years younger from you now?
I wish I would have worried less for sure. I think Steve Jobs' like best quote is you can't really connect the dots going forward, only backwards. Like I never would have thought I would have been in crypto. And if you had told me I was working in crypto 5 years ago, I would have like probably hated myself for it, but I'm super happy how it all turned out. So, everything, if you're smart enough and you have like some good common sense, things work out pretty well.
Good. And last question for me is, if you weren't working in crypto professionally, what would you be doing with your career?
I think I would be still in the entertainment industry. So I really had a lot of fun working in the strategy, business development area and entertainment, probably at a larger studio. So I think I'd be doing that and always sort of searching for a way to do my own thing and always wanted to be an entrepreneur. So
Very
nice. Cool. Justin, thanks for coming on, telling us about your journey.
Thank you guys so much. Yeah, thank you guys so much for having me. It's a real honor.
Yeah, and we'll have you on again soon after Astaria launches, and we can, kind of do a review from there.
Awesome. Thank you guys so much.
Man. Thank you.
See you around. Thanks, everyone, for watching this edition of Flywheel Pod. We had on Justin Bram breaking down everything deep into DeFi, and now going into NFT with Astaria. If you shoot for the moon, you go for the stars. And I think Justin has done that in his short time as a builder. And I'm sure he'll be in this industry for a long time doing a lot of cool shit. Any final thoughts on this one, Kiet?
Yeah, I'm just honestly excited that he's going to get back to content producing, right? Like, we need more voices.
Yeah.
We need more voice of reason. Like, no more of those like YouTube thumbnail where the guy goes and like there's like 18,000% APY or some stupid shit. Like,
no more airdrop threads.
No, please.
No more threaders.
Airdrop threads are
no
over.
I banish our threaders to the shadow realm. Next
I mean that's a bit. I think threaders are okay. Just no more guides on airdrop guides. Like here's a guide to the guide of the airdrop guide.
Let me rephrase that. I banish all engagement farmers to the shadow realm. Threaders are good. We like our threaders. We don't like the engagement farmers, whether on Twitter or with their fucking YouTube thumbnails with their jaw to the floor. Get the fuck out of my face.
Ooh, spicy today on Flywheel.
Yeah, this Flywheel. Yeah. Anyways, but if you like what we're doing here at Flywheel, we keep it honest, we keep it humble, we keep it about the builders. Don't forget to like, comment, subscribe, hit that bell button to keep up with us for more high quality, good, wholesome content. Also, don't forget to follow us on Twitter at Flywheelpod. Join the discussion on our Telegram at Flywheelpod. You can follow me on Twitter at DeFi Dave 22.
You can follow me at 0x_K.
And we'll see you next week.
Peace.
Everything said on this episode is not financial or tax advice. This channel is strictly for educational purposes and is not an investment advice or solicitation to buy or sell any assets or to make any financial decisions. This video is not tax advice whatsoever. please talk to your accountant and do your own research.